Hey, good morning everybody and welcome to Coffee with Great Wealth Strategies. This is Eric Kenyon, also known as Regular Joe. I've got my cup of Joe right here, a little hot coffee. I'm out here filling up your cup, hopeful that you will fill up other folks' cups by sharing this very, very valuable information. And one of the things we're going to talk about today, or the main thing we're going to talk about, retirement plans. And this is kind of great because I am not a financial advisor and I don't sell these products. So I can give you non-biased, really good, open information that can make you think maybe a little differently about what you're doing and why you're doing it, and at least question it, maybe make some changes. I don't get anything out of this. This is totally me sharing good information for you and not essentially advising you so that I can sell you a product, because I don't sell you this stuff. So let's talk a little bit about IRAs versus 401ks. So retirement planning comes in many shapes and forms, and I mean there's a lot of them out there, but 401ks are by far the most popular saving plan in America. They're run through a person's employer, and contributions can be directly withdrawn from that person's paycheck. While a 401k is simple, and it is simple, it is not the best option for almost all retirement savers, and I'm going to explain why here in a minute. Individual retirement accounts, IRAs, are a viable alternative. And I will get into this as well in just a minute. My favorite happens to be Roths, and I'll tell you why. But here are a few simple reasons why you should consider them. Just why you should consider them. So just take this to heart and think about it a little bit. So more investment choices. That's number one. According to a recent study by the Plan Sponsor Council of America, the average 401k plan offers participants a selection of just 19 funds. Such limited options could have the retiree putting too much of their nest egg in one area. If a certain industry tanks, you could find yourself without any of your hard-earned income that you spent so much time saving. By contrast, IRAs allow savers to invest in thousands and really unlimited different types of stocks, funds. There are so many options when you get into self-directing of IRAs. You can invest in cattle and grain elevators. You can invest in anything that doesn't pertain to you personally. You can't self-indulge with it. You can't invest in yourself, numismatics, and a few other things. But other than that, the slate's pretty much wide open for you to be able to pick what you want to invest in. And I've always been a huge fan of gold and silver. Still am at these rock bottom low prices they are right now. Is a good time to take a look at getting into those. But it'll also enable you to build a very, very diversified portfolio that much more matches your personal risk tolerance. And you can also invest in things that you really know a lot about and care about. Lower fees. This is huge. We've done some studies, and if you check out my infographic, I break that down even a little bit more. But fees on average with managed accounts are averaging 66 cents of every dollar you put into a retirement plan, and a managed account go into fees. But here's some other data here. Convenience comes at a high price in the realm of retirement accounts. According to a 2012 study from the Investment Company Institute, the average 401k investor paid $6.30 for every $1,000 they put into an account. Well, this may not seem very high, and it doesn't, because what they're not telling you here are all the hidden fees. There are plenty of other charges that the fund managers will take on to the 401k participants to increase their bottom line. You would not believe all the little additions that they add on to the fees. It's the fees that are in there that absolutely blow you away. By contrast, IRAs, those fees range right around $1 for every $1,000 invested. These expenses can often even drop further once an account balance hits a certain point. More penalty-free withdrawal options. This is another bonus here. In most situations, if you withdraw money either from a 401k or an IRA, you're going to pay some taxes on the income, and you're also going to be slapped with an additional penalty or fine by the IRS. There are a few exceptions. However, they only apply to IRAs. First-time home buyers can withdraw up to $10,000 to be applied towards a down payment of a house with no penalty. There's no problem with doing that. You can do it. The same action can also be taken to finance higher education costs for the account holder or family members. In the case of Roth IRAs, investors can withdraw contributions tax-free and without any penalties. The key word here, though, is contributions, which you put in, meaning an early withdrawal of actual investment earnings, your gains on it, they're going to likely result in a 10% penalty. So let's say you put $5,000 into a Roth IRA, and you want to, and it gains. You say you earn it's up to $10,000, and you want to pull $5,000. Well, you can pull $5,000, your principal, the money you put in there, because it was already pre-taxed. You can pull that out anytime without any penalties. Most people don't know you can do that, and you just leave the capital gains, the gains in there that are still growing tax-free. Pretty exciting. So access to Roth advantages. The biggest draw of a 401k plan is that you can delay paying taxes for decades while money in the account continues to grow. Putting the money in a traditional IRA presents the same problem, but a Roth plan allows you to pay taxes on a lower amount you put in up front, and usually at a lower tax bracket. Right now, when you're just starting to invest, or you're about halfway through your investment career, you're hopeful that you're not going to retire poor. Who wants to retire poor? Who wants to retire at a low tax bracket? So why don't you go ahead and pay taxes on the money and put it in an investment account today, now, while your tax bracket is essentially possibly lower, and then grow it so that you don't have to pay taxes on it later. So investors can then decide they can enjoy decades of growth without having to worry about when Uncle Sam will arrive to take his part. There's also forced distributions with our 401ks. IRAs are where it's at, guys. I don't have anything to do with selling them. My buddies at Asset Exchange Strategies, where you can find their information on Great Wealth Strategies website. They've got a great booklet there that can explain this a little bit better for you, because those guys are tax professionals. But go check them out on the Great Wealth Strategies site. I'm trying to think about what link that is on the site, but under Solutions, if you go to Solutions on Great Wealth Strategies site, under Solutions, you will see a tab right there that'll deal with redirecting or self-directing your 401ks and your IRAs into self-directed accounts. So please go check that out. There's a lot of material on the website about tax codes, IRS codes 590. I put a lot of stuff together that's kind of really boring, but I took the important stuff out and put it there for you, so you can see what the benefits really are of this. So once again, this is Coffee with Great Wealth Strategies. I'm Eric Kenyon, also known as Regular Joe, filling up your cup, and I would really appreciate it if you would like this YouTube channel, and please share these videos on Facebook, Twitter them out, get them out there, and definitely subscribe to our newsletter on greatwealthstrategies.com. Thanks. Take care. Bye-bye.